Hello, everybody. Thanks for checking in. My name is Mark, and I'm someone who is pretty well qualified to give out trading advice, I guess you could say. Um, I spent 20 years in the institutional trading world. I worked directly for Steve Cohen, for Mario Gabelli, two of the greats. I was also the head of trading at three institutional money managers. I was a market maker. So when it comes to trading, there's not too much I haven't seen. So make sure you check out stockmarketjobber.com and join our community and let us know if you want any trade ideas or notifications. But I just want to look at the S&P 500 here and one of the sectors, the tech sector. It's important to understand that the S&P 500 is the sum of its parts, okay? It's 500 stocks and it's 11 different sectors. And by examining what's going on in the sectors, sometimes that gives us insight into what's going to go on in SPY. Now here's Friday's action was really strong. And we could see here that this level that was support turned into resistance and it's been broken through. And we could see a little bit of follow through. It's interesting to see here, but this is something that's really important is understanding where the important levels are. If you want to be a good trader, you got to know what price levels are important. It's that simple. I don't think it can be done if you don't. Notice, for example, SPY back in September ran into resistance right around the 410 level. Well, where did it hit resistance in end of November and in December, right? It's the exact same level. So if we start to move a little bit higher, my guess is that we're going to hit resistance there again. Now, I'm not saying it's not eventually going to break through and go a lot higher, but that's going to be, we're probably going to stall out if we do get there. And we could see here, another example of important levels is 390, right? Notice how support turned into resistance. This happens because of buyer's remorse. People buy, and a lot of them regret doing so if it goes lower, assuming they didn't sell a pair. So a number of these investors tell themselves, or these remorseful buyers tell themselves, hey, I made a mistake. I'm going to get out, but I want to get out at break even. So if it gets back up to my level where I bought it, I'm going to sell it. So I can exit the position at no loss. So they place their sell orders at the same level they had their buy orders at. So buyer's remorse can turn support into resistance. And we had the same thing over here, right? But we're broken through it now. Now, like I said, the S&P is the sum of its parts. So let's take a look at the tech sector. This, I think, is probably the most important thing to focus on this week to get insight into what's going to happen with the broader markets. The technology sector is one of 11 sectors in the S&P 500. It's the biggest one, so most of the time it's the most important. Not always, but most of the time, or a good part of the time. Anyway, notice how we are testing this important 129.50 level here. All right, we got about $1 above it, so that's not really enough to say we're through it, but the action looks pretty strong. So we'll see. My guess is we have some follow through, but as always, we're going to let the market tell us what to do. You don't listen to me. Listen to what the market says. Notice here, resistance became support. This happens for the opposite reason. This is seller's remorse. People sell, and when the shares move higher, a lot of the people who sold regret doing so, and they tell themselves, hey, I'm going to buy my shares back, but I'm only going to buy them if I can get them for the same price I sold them at. So they place their buy orders at the same level they sold at. So resistance becomes support because of seller's remorse. Support becomes resistance because of buyer's remorse. And now it looks like we're breaking through there. Resistance is a large group of sellers all trying to sell their shares around the same price, all right? If we move higher through a resistance level, it's not just symbolic. It tells us that the sellers or the investors who created their resistance are gone. They're out of the way. They canceled their orders or they finished their orders. Regardless, when in any market, when you take sellers out of it or take supply out of it, it sets the stage for a move higher. So I think this is going to be the most important thing to focus on. So make sure you check back every day and check out stockmarketjobber.com. Let us know what you think. And yeah, thanks everybody. So just keep an eye on this week. Okay, thank you. Happy trading.